Welcome to Real Estate Secrets Unlocked, the podcast that takes you inside the minds of the industry's top professionals, revealing their top secrets to success. I'm your host, Danielle Damianov. Whether you're a seasoned pro or just starting out, get ready to learn the latest trends, strategies, and secrets that will help you succeed. Join us as we go beyond the basics and explore what it takes to make it in the world of real estate. So buckle up and get ready for a wild ride. This is Real Estate Secrets Unlocked. Hey everybody, it's Danielle Damianov with Real Estate Secrets Unlocked, and I'm so excited today to be here with Jim Sheils. He is with Southern Impression Homes. He has about 2,000 flips under his belt. He has been in real estate for over 25 years and has a niche, which is build to rent, and also builds a lot of different homes for investors. But one of the big things I'm excited to talk to you about is your 18 summers, because I was doing a little research and reading about that, and that is something that I'm so passionate about. So just to kind of give you a quick intro about me, and then we'll get into it. But I, just like you, when my kids were little, thought, oh my gosh, I really only have the summers with them because during the school year, everyone is so busy. So when they were about 4 or 5, we started traveling to Europe every single summer for 5 to 6 weeks, sometimes Massachusetts, which is where I'm from, but mostly Europe. And one day I was in Italy slaving away. I mean, I was selling real estate, and doing mortgages, so I'd have to be going around to everyone's beck and call. I'd have my backpack with my laptop on my back, going into coffee houses, and my family was always out having fun. And I was like, there has to be a better way. How can I do everything in my business, lead gen, marketing, lead follow-up, outreach, and be done by one every single day so I can go out and spend the rest of the time with my family? And so I created a CRM called Done by One for real estate and mortgage professionals. And it's all about living your life and having your business fit within your lifestyle. Really automates the sales and marketing part of your business, the lead generation. So you can work on your lead gen, your sales, your marketing, social media, all of that is automated. And then you're done by one every day and you can go live your life. So why don't you tell everybody a little bit about you? And before we get into the real estate part, which is fun, let's talk a little bit about 18 Summers and like how that came about and stuff like that.
Sure. Yeah, thanks, Danielle. Well, um, I am a father of 5. My wife and I, we have a blend of biological and adoptive children, ranging right now from 3 to 21. So we're all over the gamut. Going through, we still have toddler meltdowns, and now, our oldest just bought his first property. But the thing, like you said, Danielle, years ago, I had a scare, and that scare was not me getting sick, but, when I started real estate young. I'm 50 now, but I went into it about 26 years ago, and, I was always that kid that looked young. When I went to real estate events, I had some success, and I got invited back to speak, and at this young age, before I was married, before I met my wife, Jamie, I saw some of the people that I was really influenced by, the big influencers, and they had great balance sheets and some incredible stories, but I saw things behind the curtain backstage that I just thought, "Oh my gosh, these people have no family life." It was almost like all a sham, and it scared me, and I thought, "Why? I'm not no different than this. I'm very driven on this," and so that always stuck with me. And so my wife and I created 18 Summers about 10 years ago because we wanted to see, especially real estate entrepreneurs, because that's what we are. We wanted to see entrepreneurs in general be successful at home. And because the years are not all created equal. As you realized with that, summer commitment of saying, it's going to be tough, but I'm going places with them and making memories. And yeah, you're going to have to fine tune how you were doing it like you did. But that's what our 18 Summers is about. And we wrote this book that kind of talked about our family story, how we came together, struggles we overcame, and just some simple principles that we lived by that have, now being used by about 300,000 families worldwide. I mean, the first time we released our book, it was, we were talking, I think we put $800 into it. My wife was breastfeeding our daughter, like hitting send on Amazon. And the last time we released it was with a publisher, and it went to #1 on Wall Street Journal for the 3rd edition. And so that's something we never expected, Danielle. And I'm going to say, I don't think it was that we're that great of writers. I think the stories are pure and good and they can be relatable, but it's just the subject. There's so many,
Probably within the book.
yeah, and and that subject just resonates to people because there's so many ways for us real estate investors and professionals to up our game, which is super important because we got to provide. And we want to, create probably generational wealth. And I'm all for all that. But there's not a lot of guidance of saying, well, how do we stay successful at home as we grow this? How do we not get lost in just the busyness like you were talking about before in the coffee shop? There's not a lot out there. Not a lot for our type of industry or niche or career because it can overrun you. Whether you're a top lender, a top agent, a top investor, you can all of a sudden all the reasons you went into that to be able to buy back your time and create the memories and have the things and do the things you wanna do, you've almost given that all away and then some. And so our whole 18 Summers movement and our book and kind of our talks, workshops, retreats, which again was just a labor of love, a side business around our main real estate business, but it's helped thousands of people now because we were able to share kind of the things that we struggled at, things we failed at, things that could be easier, if we were able to start over, 20 years ago. So that's what it's all about, and again, it's nothing that I thought would get a following. My wife and I are still kind of like, "How did this happen?" We're getting interviews from, but I think it's again, the message is so important because we all feel that clicking time clock, and we can't stop time, but you can slow it down, you can get more out of it, I think, and that's what we try to teach.
Hey, real quick, if you're enjoying this podcast, make sure to subscribe to my YouTube channel, Real Estate Secrets Unlocked, and hit that notification bell so you never miss a new episode. And by the way, if you're a mortgage or real estate professional looking to level up your business, check out the Done by One CRM. It's at donebyone.ai. It packs tons of tools that will help you automate your business, automate your systems, your lead generation, your lead follow up, social media, email marketing, and it will allow you to close deals faster. If you are ready to take your career to the next level, join my team. We are looking for real estate agents, mortgage professionals, and real estate agents that want to be mortgage professionals. We're all about support, growth, and crushing it together. The links are in the description. Check them out now and let's grow together. Absolutely. And, I think one of the things is, and I know me, for sure, I grew up in the hustle culture. I mean, my parents are in their 70s. They're still grinding it out every day. And I look at that and I'm just like, oh my gosh, like, I don't want to be doing that. I want to be enjoying life. They can't travel as much. You become a slave to your business. And that's what a lot of people do in real estate is, they get into it for the freedom, which if you're not a big producer, you do have freedom, right? Because you're not really doing all the things that you need to be doing. But if you are a big producer, you get into it, you're following all of these coaches and, gurus, and it's just you become a slave to your business and it no longer is fun anymore. So really taking the time to figure out, okay, what do I need to do to have my business fit within my lifestyle? And that a huge thing for me, and you can do it, it's limiting beliefs that many people have. So when we talk about, passive income, let's get into it. When did you got started in real estate at 26? No, in your early 20s.
24.
Okay.
Yeah, no, I'm 50 now, so it's, yep.
Let me guess, you read Rich Dad Poor Dad. Like,
One of them, I had a family friend back 'cause I'm from the Northeast as well, sit me down, and I think it was Rich Dad Poor Dad in another book, and he said, "You should look at buying income producing real estate." I didn't know what the hell that meant. That meant nothing. I mean, I didn't know, and, but I started to read those things, and it made sense to me. And, growing up a half hour from Wall Street, I had a lot of friends flocking to the stocks. I did not like that world. It didn't make sense to me. I like the tangibility of real estate as I read about it, the levers, and so I actually left and moved to California and started investing in a Central Coast city out there that was very undervalued, very cheap, and had signs of growth. But that's I had always set from that early age, starting at 24, I started studying on it really at 22. Amazingly, right when I graduated from college, I started studying. Imagine that. Um, And real estate's just what came back, and I'm sure you saw this. I saw that 8 out of 10 millionaires made their money in real estate.
Mm.
I liked that. I had an interest in it. I liked those odds, and so I just became very determined to become a real estate investor and own property and do deals. And that's where we are now, 26 years later.
So let's talk about, you going out to California, investing in this, and because I'm sure this is a question that a lot of people have, especially a lot of new investors that might be young in their 20s wanting to get into this. Where'd you get the money?
Well, I saved and scrimped for my first 10% down payment on a three-family home that was 152,000.
Wow,
Uh,
that was expensive back then.
I don't know. That was 50,000 a unit back in, what was that?
Oh, true, true. Yeah, 3 unit. Okay.
Yeah, 3. So it's for California too, this little town in northern Santa Barbara County called Lompoc, California. I saved. And then from there, I always brought in investors. When I was looking up, there was a very easy way I saw for people to structure a deal. And I don't do these anymore, but it's what got me started. I'd find someone who I'd say, you put up the money, I'll do all the work, and we'll split the profits and losses 50-50. It was just a very simple thing. And we started to flip HUD foreclosures. These are
Okay.
foreclosures in Bakersfield, California, and we made our investors a lot of money, because we were just hungry, and our little team went after it, and that's what we did. And so that's how I found people, and you're like, "Well, who said yes?" I said, "Well, I can tell you the list of people that said no was a lot longer, but like most say, I started with, friends, families, and fools." I guess they say that. I don't like to say that. Fools are people who are just like, "Yeah, I love you, let's just do it." And my family did not have money. They didn't come from money. My parents were very middle income, so it wasn't really an option just to, leverage off my family worth.
And so I'm assuming early 2000s,
Late 90s?
late 90s. Okay.
Sounds yeah, and then really enjoyed quite a run up there, till 2005, and then things were going crazy. I didn't see the meltdown coming the way that other people did, but I did see that I couldn't make deals work anymore. The prices had gone so far up, so I just started to sell off property and do some 1031 exchanges from California to Florida, because I found some areas in Florida that had even in that run-up period around the nation, Jacksonville, Florida, where I came to, was still a pretty affordable coastal city, which those words don't normally go together, affordable and city. So I left, in about '04, '05 to come to Florida. I've been here ever since.
Okay, so we came the same time. Well, yeah, came down to Southwest Florida in '04. Uh, that was a good run for us. In fact, we were working with a lot of investors. We had an ad on eBay, believe it or not. And, we were dealing with a lot of investors out of California, and they were flipping, buying land. We were putting homes on it, flipping contracts. We all know how crazy that was from '05 until '08 when everything came crashing down. Um, so tell me a little bit about mentors. Like, a lot of times I feel like, especially if you're, young, just starting out, did you have a mentor that kind of took you under their wing? How did you start to learn or study all of this?
Yeah, I had a few mentors, and I highly, highly encourage mentors, and these are mentors who have really been there and done that. And it's funny, I would go to some real estate classes, and I'd find sometimes the person teaching it was really knowledgeable and, someone that could really dig in with you and show you the ropes. Other times, they were just really just a good, kind of ringleader, you know what I mean? They were a good marketer and they could talk, but they weren't really doing the real estate deals, nor had they done many. So you had to kind of cipher through that. But I found, actually at one of the events like that where the person did some real estate, but not much. I found some of my mentors actually, and they were from Australia. Became good friends. We surfed together. They were about 10, 12 years further down the road than me, and they were able to show me the ropes of properties and leverage and what's good overhead, what's bad overhead. I also got lucky, that, he's now retired recently, but, a guy named Keith Cunningham. So Keith Cunningham, wrote a book called The Road Less Stupid. He was the original, kinda inspiration in the first Rich Dad Poor Dad books. We worked very heavily with that, and he was, the instructor for Tony Robbins', Business Mastery for years. I met Keith as a staff member on one of these real estate things, and he started, "Hey, we're gonna start a mentoring group." So I used to have to, not have to, I got to go to Austin, Texas every 3 months for 2 days and sit in a room with about 12 other entrepreneur investors and kinda learn from this person who is now, pretty world renowned, and he's just retired in his early 70s, I believe. And so I was very lucky to have that because, man, I remember saying I learned more in my first weekend sitting with a good mentor for what I wanted to do than I did in 4 years of college.
Yeah.
And I don't insult anyone with that, but that's just the truth, so I'm not gonna I'm not gonna not tell it.
Absolutely. And it's so funny because, my husband, for example, he'll always say, "You spend so much money on coaching. You spend so much money on this." You have to if you want to get places quicker, because how a good mentor and spending money to invest money in yourselves will draw. I mean, my daughter's going to go to college next year. She's looking at Miami. It's 90,000 a year, not it's per year, which is crazy to me. Think about if you put $90,000 a year into yourself, how far along, you could be.
Sure. Yeah, and it's a numbers game because I remember when I had spent 6 figures, I made 7 figures. When I had spent 7 figures on that education, I'd made 8 figures. So that that's good leverage, I think.
Yeah.
And it's hard for some people to understand because it does see, and look, there are people out there that are promoting things, they're not very worthwhile.
Right.
And there's that it's like I've paid well for some really great advice that has absolutely been 5x or 10x result from it, and you have to be open to that, and that, like you said, that continual learning is so important.
Coachable, definitely have to be coachable, and then the next thing is take action, because a lot of people will learn, a lot of different things, but then they never it's like that analysis paralysis. They
Oh,
never
yeah.
to the next step.
Yeah, but when I would teach Danielle, I would say, "Look, the best," and it would be at a real estate class I get in, or a course or event, I get invited in to guest teach or speak, and I would say, "Look, a lot of people have been coming up and saying, 'What's the best real estate, event you've ever been to, a real estate class?'" And I always say that's a real easy one to remember. It was 432 North M Street, that three-family house that I bought because I feel like that analysis paralysis, you can always keep learning. I mean, I'd see guys for years coming back to events, and they're always about to do their first deal. And that's really depressing because it's not gonna get them the financial resource that they're so wanting by just almost doing a deal. So I always say, "Look, that first deal taught me so much, and it's probably not gonna retire you, it's probably not gonna bankrupt you either. So just start the reps now,"
Absolutely. Yeah, and I think one of the things that you said when you were talking about that, out in California is you weren't able to make the deals work anymore. And I want to point that out because a lot of times people get into real estate investing and they have this one niche that they're working. And sometimes that niche is no longer working, but they don't stop working that niche, right? And so the great thing about real estate investing is there's so many different ways to invest in real estate, whether you're fixing and flipping, fixing and holding, renting, building. You got to kind of find where like what's working now and do that. And then if it's no longer working, pivot into something else. So back in when you were, doing that back in California, you did some 1031 exchanges, you moved to Florida. What did you get into in terms of real estate investing in Florida when you made that move?
We continued to look at affordable property around Jacksonville, and then when the '08 meltdown happened, that fell out so quick, and that was painful for the stuff I was holding, let me tell you. But there became so many good deals so quickly that for a number of years, going from end of '08 right into about 2014, those years, I was doing bulk foreclosures. I was buying foreclosures in bulk, I was renovating them, and I was either keeping them for myself or, being hired by an investor to provide them a turnkey property. So that was my main niche, in Jacksonville until about, 14. where again, so many people were getting in the game. It was just if to make numbers work, you'd have to cut corners on the rehab, which ends up biting you very shortly down the road. And so my now building partner came to me and said, "Hey, I've got this land. Do you want to throw in for some development fees and maybe we try building our own rental homes?" Building? I've never built. I mean, I've always just been a rehabber for years, and I've done 1,000 of these. I don't know about building a new home. I've never done that. And so, but it was kind of like you said, that pivot. It wasn't working. The old "Who moved my cheese?" And so we went into that slowly but surely, and now now we're a decade in, and we're staying with that niche at this point, and I can tell
Yeah.
you now.
So right now you're building homes, building to rent, right? For investors or end users or
Sure, we'll build some for retail buyers, but our main focus, we work with over 1,000 active investors right now. So, we build single family duplexes and quads, all residential real estate. You're a lender, so you can get that better long-term financing, and that's what we focus on building for our people.
I'm gonna be completely honest with you. Like one of the big things that you have to have in this business, especially in like real estate investing, and if you haven't been in it long enough, then find somebody that has is that insight or that foresight. Because I can see, back in 2008 when everything crashed, I remember vividly 2006. I was at a convention in Atlanta, Georgia, and Donald Trump was there. Yes, Donald Trump selling his Trump University. He was on stage speaking, Robert Kiyosaki, Kim Kiyosaki, and they were warning. That was 2006, and I owned a real estate and mortgage company, and I was like 24 years old at the time. So, think
They were warning. That's good. They knew then, huh?
they knew in '06, and they said it's gonna crash, blah blah blah. Of course, 2007, I'm, like, giving birth to my daughter in August, and we lost 20 deals in a day, and it just started banks were closing. It was terrible, but they knew, right? They saw it coming, and so right now and, Grant Cardone talks about how much debt is in commercial real estate and where the commercial real estate is gonna be going. How much, there's so many loans that are coming due at the end of 2024 in commercial real estate, and we're starting to see a lot of foreclosures and short sales. And so for an investor to buy these properties, these people are going to have to rent, right? The foreclosures are up. People think there's no short sales, but there are because anybody that bought 2 years ago that can no longer make their mortgage payment in a declining market is not gonna be able to sell their home with all the fees, the back owed mortgage payments, maybe forced place insurance and real estate commissions, right? So we're starting to see a lot of that again, and those people are gonna have to rent. So I think right now there was a period of time where I feel like the rental market, and you can correct me if I'm wrong, buying to rent because prices were high, rates were high, it was difficult. And now I think people are gonna be going into a season where having rental properties is gonna be huge.
I think so. And there's and you being here in Florida, you understand. We saw, I mean, Southwest Florida, where you are, that was the fastest growing in the US through the pandemic, bar none. I mean, the stats show that. And man, we were building down there. You couldn't get anything done. No. Supplies, vendors. And so what happened was, we saw values go up, we saw rents go up. Then we've seen, since rates started to go up June of 2022, a stagnant and even a little bit of a drop in rents. And in the beginning of this year, for our stuff in all of our markets, wherever it was, whether it's Northeast, Central, or Southwest, we saw a ton of what we called COVID inventory come on the market, right? All the builders and developers finally got their supplies, boom, it all put on. So the absorption started to slow down. We were in a pretty normal market of about 35 days or less. I mean, during the pandemic, it got to like 4 days to fill a property. It was ridiculous. But, average market about 35 days. Then it was going up to about 72 days. And, still doing, but we had so much come on the market to be absorbed for rent, we saw a slowdown. However, what we're seeing now, because being a builder, we watch the permits very closely, to see what's been pulled, what's been approved. With these rates spiking, a lot of the bigger developers, the banks are saying no, they don't want to take the risk. So as we're working through this inventory, through the rest of this year and into Q1, what we're seeing by Q1 of Q2 of next year, Danielle, is yeah, everyone's going, oh, it's been taking longer to rent and that. We have such a gap of what's gonna be coming behind this COVID inventory that by it's looking by about mid next year, and again, these are the people like you just named saying this, not those exact names, but people who know these stats well. We've got nothing coming behind it. So all of a sudden, it's like we've worked through, and, you don't just have a property done in a month. You're talking 2 years from approvals to this and that. We're gonna have a gap in most of our markets, like, especially where you are, where the population's still growing. We're gonna have a gap in inventory, man, and that's gonna be an interesting thing again because it's great for, investors like us that own properties in these areas. Because what normally happens? Well, values and rents jump. So that's why, we're letting people know about this now, like, "Hey, this is what we're seeing." And not only that, the institutional money loves Florida. They're outside their buy box right now because that commercial world is still high. You
Mhm.
have a few more rates drops, which I think everyone's predicting about 4 to 6 rate drops next year. The last IMN I spoke at the big commercial conference, I was on stage with some of the bigger hedge funds, and they predict there's about $900 billion that's waiting to come into the residential market. So not the other market, just our little niche, in the next 12 months, which could make for some interesting, occurrences, to say the
Yeah,
least.
definitely. Yeah, and that's the biggest thing about foresight, right? It's like trying to see what is going to happen in the future by using data and then also what has happened in the past. Because the history, repeats itself. And I've been preaching 2 years ago, I wrote a book called Short Sale Secrets Unlocked because I started to see, okay, these builders are just like these builders in 2006, 2005, and 6, where they're, cutting real estate commissions. People are lined up down the street. There are multiple offers. It was taking forever to get supplies. I mean, our area here, we ended up getting into when the market crashed, we had some really good things going on because we had the Chinese drywall. And so
Oh, yeah, I remember that, yeah.
yeah. Yeah, so we took advantage of the Chinese drywall and we started getting properties at $40,000 that were selling for like 4 or 500,000. You know,
Mm.
in 200 square feet going in, renovating them, rehabbing them, and I wish we kept them, but we flipped them. You know, it's funny, we just found another property in Cape Coral full of Chinese drywall. Somebody's been living in that house since '07 with full of Chinese drywall.
Yeah, that was some nasty stuff, that's for sure. I remember that well.
Yeah, but you could get great niche. It was a great
Oh, I love it. Well, it's all fixable. I mean, with a rehab, as you said, you didn't get sad about that. You got excited. It's like when I'd walk into a house and it would be, I mean, you'd have to put on a mask because there had been cats or dogs pretty much running the house. You go in here, oh gosh, and I would just get excited. Ah, wow, this is good. This is easy to clean out. Like we can get rid of this, but I know it scares away most people. And bankers go, "Oh my gosh, it's totally polluted. Just get rid of it." So yeah, forget.
exactly. Well, and a lot of people get scared. There's not a lot of people that wanna take that on, so that's, great for the real estate investor that can look at something and be like and that's my husband's a big it looks at all of them and he's like, "This is the perfect property." Like, we want the holes in the walls. We want, that kind of stuff, which you can get great deal. Uh so tell us a little bit again about your building to rent. Average days on market right now are taking
That's gonna be a moving target. It was up to is again, we're in 12 different markets. So there were some markets that were at 20 days, right up to about 75 days.
okay.
Um, and so, but that's always teetering down and by a monthly. So I don't have an exact number, but I can tell you it's between 20 to 75 days to fill. And look, I love the properties like we were just talking about. Those are good for active investors like you and I and my wife and your husband. It's not for everybody. And that's where there are a lot of people that they've got a really successful practice or business or career or, again, being from out in California and made a lot of contacts. They do really well in like the tech industry or insurance industry, and they're just busy. But they're saying, man, I know I should have some real estate.
Mhm.
I know I should. But their own backyard of Orange County, California or wherever, like as you said, you worked with a lot of California investors, uh, it doesn't really supply it. nor do they want to get in. I don't know how to find someone to get rid of Chinese drywall or this or that, nor do I have the time or even I don't know how to figure out and inspect a home. So we work with people that, you know, only want, maybe an hour to a month of exposure to real estate, but want to have a portfolio.
Right.
And that's why we had to do new construction. We used to renovate old homes for ourselves and investors, and that's a good way to do it. But anyway, you look at it, even, older homes, there's probably going to be some more maintenance and repairs involved. And what we found with the new construction model, and now we've done a few thousand of these, the occupancy time tripled. We were holding properties with tenants for about 13 months. The tenant would say 13 months. Now it's a little over 3 years. The turn costs went from, they went down about 75% on an average turn cost. We're able to build it differently, do some things differently. And again, most people are saying, I want to own real estate that we work with. Anyway, our people, I want a long-term buy and hold. I just wanted to get going, very little involvement, kinda like that, the old, merry-go-round at the playground. You get it going, then you're just kinda let it out, keep going, and that's what we aim to do with the new construction. So, we focus single-family duplex and quads ranging from 260,000 right up to 985,000, for a quad in the nicer area of Jacksonville, and that's what we focus on is that investor niche of investors who wanna own a portfolio. They don't want a lot of guesswork. They don't want a lot of maintenance and repairs. And that's why we went the new construction route, because new construction does not fix every issue, but it definitely hedges the risks in areas that a lot of people get concerned when they're first going into real estate investing, if that makes sense.
Yeah, and I think that I mean, the other thing with, new construction, and this is a huge issue, in Florida, especially in my area, which is Southwest Florida, is insurance, right? So I have a new construction deal right now, and we just got, debt to income ratio is so high. I'm like, I need the cheapest insurance we can get this lady. And we got it down to like $82 a month for a two-store, which is crazy.
We actually do this whole thing, Danielle, where I show this video of Punta Gorda, Florida, the day after Hurricane Ian, because my dad's cousin was living down in Punta Gorda during Hurricane Charlie in 2004,
Yeah, it
and
was
that
done.
so that I mean it decimated Punta Gorda. So what happened? And this is important for everyone to know who's looking at real estate, like you said. The government stepped in and said, "Time out. Everything's different now. You can't build at 2 feet or 3 feet above sea level. You gotta be at 13, 14 feet. You gotta use this stronger structural design, these stronger fasteners." And this video I show of Hurricane Ian going, and right through Punta Gorda, it looked like, yeah, there was a windstorm, but the houses were all intact. And it's because everything got rebuilt to a new code. And so new construction, I actually am doing a webinar tonight with our main insurance guy, who's, again, he's just done my own portfolio for years, my building partners, and, hundreds and hundreds of our investors. He says, we like the risk of new construction. It's built on higher ground. It's built, with stronger structural design. And what's the two things that get you? Flooding and wind. And so, like you said, where I live here in St. Augustine, I'm 4 seconds off the ocean and 10 houses down to the intercoastal. And, so there's only 10 houses wide on this little barrier island. Well, my house would be 3 times the size of some of the smaller cottages down on my road. Their insurance is 7 times mine.
Mhm.
Right? 'Cause their houses were built in the '50s and they're low lying. And my house is built in 2004 and it's at, 13 or 14 feet. They're at 2 feet, and that makes all the difference. So new construction is an absolute hedge to this crazy insurance situation going on in Florida right now.
Yeah, that definitely. I mean, that's the biggest thing when somebody comes to me for a loan and they're like, "Well, how much, what purchase price can I do can I go up to?" I'm like, "It all depends on the home." Because, I don't know what the taxes are, but more importantly, I don't know if it's in a flood zone or not. I don't know what the insurance is. How old is the home? Did you get a wind mitigation? All of that stuff really plays into insurance, and that's the biggest thing. So it's difficult, oh, you could have a $300,000 home and a $5,000 a month mortgage payment because the insurance is so high and the flood insurance is so high, right? Um, So let's just circle back. This was all awesome. Anything that you want to point out about what you're doing now, and I will make sure that we have all of that in the podcast. And then I just want to circle back to a couple of principles that you can give the busy real estate agent, busy mortgage broker, or busy entrepreneur investor on how to spend more time with their family and get out of that hustle culture.
Sure, sure. Yeah, just new construction. If you're not wanting to be an active investor, but you do want to own your own properties. And again, I encourage if you're looking to get into real estate funds are great, REITs can be great. I've just watched the numbers and ones that I've invested in comparing to own my own property. Owning your own property has the most proven way to make money. So wherever you're going, just know there's a reason why the big hedge funds come to us to raise money, for us to give them money, for them to own property. So I'm saying, great, invest with them, but own some of your own properties. It's the most proven way. And then if you're not looking to have that involvement or those horrible stories, don't go with the bottom of the barrel old properties in tough neighborhoods. Go towards the median and look at new construction. It's been one of the best risk and the best hedges of risks that I've found. So that's just what I've encouraged people to look at.
So, real quick on that, on what has been an average return? And I want to say, obviously, real estate is great. You get the appreciation, you get ROI, you get tax write offs, right? So, there's a lot of reasons why real estate is a great investment. But when you're looking at new construction, on average,
See, here's the tough thing because I don't even like to give numbers because they sound untrue.
mhm,
Uh, but a good real estate fund over the last 5 years, when you look up any of the ones out there, just say a top real estate fund, what is the return? Let's say they've made about 13%. Now, 13% is a great return, right? And that's completely passive. You just put your money in, you're getting a check. That's great. If you invested $250,000 into our build to rent program, like here in Jacksonville, Florida, 5 years ago, you would have made an average of about 69% on your money. And that doesn't even sound real. Of course, we've had that growth, but again, where we are in Florida, our mortgages, I mean, our values have gone up an average of almost 8% a year. And our rents on average, and that's taking out like the big COVID year where there was a 32% rent jump here, have averaged almost 9%. And when you start to do those numbers, that alone, that's where we get in at. But we've almost made 70% on people's money the last 5 years.
wow.
Now we always are and we were very conservative on our performers, which we share performers on all of our properties of what's expected, real insurance rates, that have already been quoted. We're starting at about, a 6 to 8% return. And that's the starting point because we don't want to overpromise.
Right.
We'd rather underpromise and overdeliver.
And I think it's a different market that we're in right now and what we're going to be going into. So definitely, want to point that out. Okay, give us a few principles.
Yeah, let me give you two principles that are good ones to start with. The first one is you're married or you're not you're dating someone, but you're working in real estate. You gotta and you have two kids, let's say, you gotta separate the parts to strengthen the whole. The one-to-one principle is the thing that I've gotten most known for teaching. Again, I have 5 children, a wife that I love to spend time with. You gotta separate the parts to strengthen the whole. You have to. That's how you really strengthen and forge a family bond is you have, big gatherings are great. I grew up in the Northeast from an Irish Catholic family, so I got like 5,000 cousins. It's great. But a lot of the connection really happens in one-on-one time. Like tonight, I have date night with my wife. It's non-negotiable. We do it every week. And it's just our reset. I spend a day a quarter with each of my children one-on-one. It's what my book was about, and that day, forged now I got a 19-year-old and a 21-year-old, and they still wanna hang out with me. That says something, and it's not because of my jokes, because 'cause they're just as bad as the other jokes out there. But the one-to-one principle is super important. It puts the magnifying glass on the relationship in a positive way, and if you're that busy real estate professional that's kinda been out of the loop, and even when you've, been home, you're not home, one-on-one time is super important.
Yes.
Um, and the second thing with that, Danielle, coupled with one-on-one time, is intermittent tech fasting. We've talked about that now really strongly for like the last 5 years, for 18 summers. We all know about intermittent fasting now. If you're into any sort of health, it's got all sorts of benefits from what I've read about weight maintenance, good for muscle, organ revitalization. When you're doing intermittent fasting, you're not giving up eating. You're just methodically only eating between this time and this time, right? And it gets great results. What I've seen, the biggest misconception, Danielle, is this badge of honor is I'm always on. Call me at 1 a.m., I will answer. If I'm at dinner, I will say, excuse me to my family and go out and talk to you for a half an hour. That is one of the biggest ways to decimate your family, and I think your income, because you're just getting run down, you have no recovery time. So I encourage people to practice intermittent tech fasting. There's gotta be times when you're completely and totally unavailable for the people you love the most, and it's gonna recharge you, and you can get back to the other stuff. Like when people used to hear, "Oh, you spend 4 or 5 hours with your son or daughter, each of them every quarter, like, and your phone's off?" Yeah. Well, what happens if you get a call? Well, then it's gonna go to voicemail. Has you know, has your business ever blown up? I'm like, "No, it never has blown up," which is probably my business is gonna fall apart if I'm unavailable for a date night with my spouse or such, but it's not. And I think people start to get used to that, and your difficult clients will understand, and if they don't, well, then you're gonna find better clients because you're not asking for anything that's unfair or out of line. So intermittent tech fasting, that's one thing that I've watched so many people, Danielle, through our talks and workshops, and myself. Remember, we teach what we suffer from,
Right.
and that's my thing where if I get nervous or something I'm thinking about, I'll just grab my phone, right? It's almost like I don't smoke or drink hardly at all, but that'd be like I'm just grabbing a cigarette, right? And it's the same thing. And so, at least if we get some separation and we turn it off and keep it away from us, then we start to realize, wow, I really grab for that a lot more than I have to. I really check email more than I need to. How embarrassing. I'll actually be doing a workshop on Saturday night with my wife that I used to go on date night and I would grab my phone and return an email or a text or take a phone call. I mean,
I did the same thing.
what
And it was just burnout.
it's burnout and it's not very good for romance. And so, and it's like, it's so insulting. But again, on the other side, it's like, yeah, but we wanna provide. We wanna do our best for our family. I get that. So there's never usually an evilness to it or a malintent. But but again, if we give ourselves that permission to say, "Hey, I'm gonna get one-on-one with each member of my family more, and I'm gonna turn off my phone." Or even when you turn off your phone or your laptop every day, like, remember, like, we brush our teeth every day, and we're not, like, saying, "Oh, we have to keep brushing our teeth." We're all glad we do that. What if you start to play with an hour a day? Hey, everyone in our family, from 6 to 7, we're gonna turn off all our phones in the house. It's what we call the dinner time challenge. I'm telling you, these little breaks, you're gonna start to feel like this decompression,
Mhm.
and everyone's rushing. No one's holding a phone in between our conversation. So the dinner time challenge is great. I'll leave you with this, Danielle. We had looked up this study. 60 years ago, the average family dinner was almost 90 minutes.
Wow.
Today, it's a little under 12.
Well, you wanna know what's crazy that you say that? If you go to Europe, it's
Oh, yeah. Yeah, our
hours.
travels, yeah, but 'cause it's an event. It's not like, "Okay, let me do this quick, plug in, charge it, now I'm out." Like, you know what I mean? Everything's rushed, and there's never direct correlation, but just from different, family therapists and scientists we've had on our family podcast, they say people are rushing off to something, right? It's that hustle thing, but what is the rush off? Normally, now it's not even anything, maybe it never was, important. It's a Facebook thread. It's an Instagram post. It's a useless text you probably didn't even have to respond to. And so if you have your phone off, and everyone does, and experiment with this just for an hour, you're all of a sudden gonna be like, "Wow, like, there's not these interruptions. We're communicating deeper. We're enjoying each other more." So yeah, the one-to-one principle in intermittent tech fasting, you put those 2 things to work, and you see what happens the next few months to your relationships, to your demeanor, to your state of relaxation or your ability to relax. I've seen some great things for myself and a lot of other people.
Yeah, I mean, both of those are awesome. One thing I want to point out on the one-to-one, and we've been doing that a lot more. But anybody that's listening to this that's older, right? Maybe you lived that hustle culture when your kids were younger, and now your kids are 30 or 40 years old. It's never too late. You can implement that now. You can start that now, right? And the other thing about the tech is I was always people were calling me at 11 o'clock at night, and I was answering, and what I realized is you teach people how to treat you. And
Yeah.
so when you're answering those phone calls, they think they can always do it. And when you stop doing that or stop allowing it, they get jaded, they get mad, right? So it does there because I used to be that person at 11 o'clock at night. I don't do it anymore. And people don't do it to me anymore because they know.
Yep. Yeah, you kinda set the stage, and your business didn't implode. Isn't that amazing?
It did not. I'm still here. Still here going strong.
Well,
Well, thank you so much. It was awesome to have you on. I really appreciate it. We're gonna get all of the info on your homes, together, so that way, if any investors are looking for a solid investment, we can definitely drum up some business for you. And I think it will be, the next couple of years is going to be interesting in the way that the markets are going. But you've been around for 26 years, and you know when to pivot. Right? So, I'm excited. I think the next couple of years for real estate investing is gonna be awesome. I don't think and me personally, a couple of years ago, I didn't wanna get in. It's the whole old Warren Buffett, "Be greedy when others are fearful and fearful when others are greedy." When I saw that greed, I was out. I was like, "Nope, I am not getting involved in this." But the time is coming. It's gonna be an awesome time the next couple of years for anybody that wants to get into investing. So, thank you so much. I appreciate it.
no, thanks for having me, Danielle. Good to be here.
Well, that's a wrap. I hope you enjoyed today's episode of Real Estate Secrets Unlocked. Don't forget to subscribe to our show on your favorite platform, and we would love your feedback. Check us out on social and let me know what topics you want more of. Don't forget to like and subscribe to our channel and our show. I'm your host, Danielle Damianov, and until next time, stay motivated, stay excited, and keep growing in this crazy world of real estate. Thanks for listening to Real Estate Secrets Unlocked.